Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental video analysis. Today is Thursday and it is not usually the US non-farm payroll. But today is one of those exceptions when we are going to get the US non-farm payroll. Yes, the US non-farm payroll coming on Thursday, the same day when we get two other important set of economic readings, and that is your US weekly initial jobless claim and US weekly continuous jobless claims. Both numbers have their own merits and they're equally very important. But let's shift the focus and focus on the equity market first of all. As you can see in the chart, the Dow Jones index closed in negative territory. The Dow was the only index among the other two indices such as the S&P and the Nasdaq which closed in negative territory. The FANG stocks are still very much leading the gains. Once again, as you can see in the chart, the Nasdaq index is above its critical level of 10,000 and still maintaining its gain and its upward momentum. Having said this, I'm not saying that the momentum is not there for the Dow Jones index, because certainly the index is trading above its all critical moving averages on a daily time frame, such as your 50 and 100-day moving average, but it still needs to clear that 200-day obstacle, the 200-day moving average obstacle. But on a weekly time frame, things do look slightly different for the Dow Jones index, because we are trading below 100 and the 200-week moving averages, and that is certainly a concern for me and for various different investors who are looking at the price from technical perspective. But enough of this technicals and let's focus on the economic numbers. As I said, at 1:30 today UK time, we are going to get the US non-farm payroll data, folks. Again, it makes me laugh that we are going to get this on Thursday. Usually always it's on Friday. The reason it is not coming on Friday because of the national bank holiday taking place over in the United States. Now, the number which matters the most, it is the US unemployment rate, currently standing at 13.3%. The expectations are for 12.4%. Now, two scenarios can really unfold from here. Firstly, if we get a number which is better than the expectations, or it confirms that yes, the unemployment situation is still improving, and not only that, we do not get a massive revision to the downward revision to the May report, I think investors are going to be very optimistic. This rally has a lot of legs to revive its move to the upside. Now, the second scenario on the flip side does look slightly, in fact, a lot more different. Why? Because if the unemployment rate continues to surge, now remember, last month everyone was expecting for this unemployment number to move higher. It is going to very much emboss this stem on the market that, you know what, this recovery is still immensely fragile and the data is enormously wild. In fact, we live in a wild, wild west world, and that means that the economic path is full with obstacles and very, very shaky. What does that mean for the equity markets? It is highly likely we are going to see some sell-off for all major US indices. Now, it is at that particular point that these price levels for the major indices are going to become immensely important, because if the abysmal price action cannot continue its move beyond these critical support levels, then there's only one way to go for the price, and that way is skewed to the upside. But you can protect your upside and downside positions by using AvaProtect. That's all for today. See you guys tomorrow.